For now, officially, OPEC Plus is sticking with a plan to pause production increases during the first quarter of 2026 amid signs of a surplus in the global crude market. Let's get more from Gregory Brew. He's written 2 books on the history of modern Iran. He's a senior analyst at Eurasia Group. He's been around the oil market for quite a while. Gregory, it's great to see you. So I know this is simplistic, but basically OPEC Plus, they're interested in increasing production to maintain market share, but they don't want to flood the market.
That's absolutely right, Andrew. OPEC Plus's strategy since April has been to increase production, to retake market share while slowly easing off the market management that it's been pursuing for the last several years. But lately, I think the members of OPEC Plus have grown a little wary of how much additional supply to bring on. They're conscious of adding supply too quickly. They don't want to push the market into oversupply. They're watching the nature of the supply-demand balance very closely. They're watching the forward curve, which remains in backwardation, suggesting there's additional space for more supply, hasn't yet flipped into contango. They're conscious of balancing supply with things like geopolitical risk, the ongoing Ukrainian attacks against Russia, a member of OPEC+. That's putting upward pressure on prices. So for now, there appears to be space for OPEC Plus to continue with increasing production. But for the first few months of 2026, they want to press pause. They want to see how the market's looking in the latter part of the year.
You, Gregory, I got to get your take on this. You just wrote an article in foreignpolicy.com, and the headline is Why Oil Sanctions No Longer Work. Can we switch over to that? So America talks about these, the Americans in particular, sanctions on Iran and Russia, but are they a blunted tool now?
Well, Andrew, it's a very interesting question. On one level, sanctions do work as a tool for shaping markets. Iran is a great example. The U.S. has had oil sanctions on Iran since 2018. And as a result, Iran can only sell to one customer, China. Now, they've had a lot of success. In the last few months, Iran's oil exports have been moving above 2 million barrels a day. And that's the highest level of exports since sanctions were reimposed. But Iran remains constrained. Sanctions have forced them into this narrow channel. At the same time, sanctions are supposed to work as a tool for changing state behavior. The whole reason behind sanctioning Iran's oil exports is to convince Iran from ending its support for regional proxies like Hezbollah in Lebanon, to back away from its nuclear program, to stop developing ballistic missiles. Iran hasn't done any of those things. If anything, it's doubling down in the wake of the war with Israel that it fought in June. Flipping over to Russia, the U.S. and the EU have been putting increasing sanctions on Russia since the invasion of Ukraine in 2022. Just a few weeks ago, we had the U.S., sanctioning Lukoil and Rosneft. But again, the goal is to try to change state behavior. And nothing that I've seen from Putin suggests that he's going to pull back on his war in Ukraine. So in that sense, yes, the sanctions no longer work as they originally intended.
If you had to, it's very hard to measure. The world burns 100 million barrels of oil every single day. But is it your read that a serious surplus is emerging in the crude market globally?
I think there is going to be a surplus. It's really just a question of how big and whether geopolitical factors push the market in the other direction. In a way, the fact that, so many analysts, so many models are predicting a pretty significant surplus in the early part of next year, that's part of the reason why we're starting to see increasing geopolitical pressure. The U.S. sanctioning Lukoil and Rosneft, Ukraine attacking Russian export terminals in the Black Sea, and then apparently a couple of tankers over the weekend. There were reports that at least 3 tankers linked to Russia's oil trade were struck by missiles or drones. This all stems from the fact that there is likely to be at least 1.5, perhaps even 2 million barrels a day of excess supply in the first half of next year. And that suggests that the market is soft enough to absorb additional geopolitical risks, to absorb additional supply shocks. So in a curious way, the imbalance in the fundamentals suggests that we have greater risk of geopolitical events with Russia, with Venezuela, right? There's increasing signs the U.S. might be taking action against Venezuela and potentially against Iran as well, right? The issue there around Iran's nuclear program hasn't been fully resolved. So while I'm conscious of the fundamentals pushing the market into oversupply and pulling prices down, I would encourage everyone to remain conscious of the geopolitical factors.
Yeah, Venezuela, it's kind of bizarre. America has been buying oil from Venezuela for years. And is it plausible that President Trump would actually launch military action against that country?
Well, Andrew, I'm always conscious of predicting exactly what President Trump is going to do.
Okay.
He is unpredictable. He's proven himself that. I would say that the U.S. is marshaling a huge number of military assets in the Caribbean. It's really historic. There's an aircraft carrier. There's at least 10 surface vessels. There are fighter squadrons. There have been attacks against these boats allegedly moving narcotics out of Venezuela over the last several weeks. The president is being somewhat cagey in his rhetoric. Right? There was a call between President Trump and President Maduro of Venezuela about a week ago. But the signs all suggest that the U.S. is preparing to escalate against Venezuela. Whether it affects oil, that's something of an open question, right? To your point, Chevron remains active in Venezuela. The U.S. continues to take some Venezuelan crude, although something like 85% of Venezuela's crude exports go to China. Again, like Iran, it's constrained by U.S. sanctions. I think the U.S. has an interest, if it does escalate against Venezuela, in avoiding striking any energy infrastructure. Let's say that there is a campaign against Maduro and it is successful, that there's some kind of government change or some kind of regime change. A new government in Venezuela is going to need oil more than ever. And if the government is supportive or friendly towards the United States, that means that the U.S. has an interest in preserving Venezuela's oil and export infrastructure. So I don't think the U.S. is likely to strike that infrastructure if it does, in fact, escalate against Maduro. But again, we'll have to see what President Trump decides to do in the next several weeks.
Gregory, thank you very much indeed.
Thank you.
Gregory Brew, senior analyst at the Eurasia Group.